Hey, what is up, guys? This is Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is look at our positions for a lot of our systems, many of which are in the platinum. As you can see, it looks like we're up about $49,000 on these positions, what with the boost having 4 contracts long, Krypton and crypto both being long, Mace being long, and MAAI 2 buy being long. So we're up about $49,000. Now, that's impressive to be sure, but let's just take a look at the at what we've had to endure. Look at crypto: one, two, three, 4 losses before getting to that point. Albeit little losses, small losses. Krypton, nasty loss, but pretty impressive gain. In fact, we can just go ahead and take a look at the performance graphs. Yeah, there you go. Just a little tiny pullback, and we have had a monstrous sell-off in the market. We can actually look at the monthly, and we kind of expect to eventually see a correction like we did in the tech bust, the dot-com boom, followed by the bust in 2000, 2002, the financial crisis in 2008, the housing market, collateralized debt obligations, etc., etc. Of course, you can always go back to 98 and the Asian flu and LTCM's collapse. I mean, there's always something. 87. So we're going to get a pretty nasty move. Not saying it's happening now. I'm not saying this is the beginning of it, but the market is certainly extended. We just switched back to neutral in terms of our OMT, but we'll get to that in a second. But as you can see, in the grand scheme of things, not a bad pullback for the Krypton. We can go ahead and look at the. So we just looked at. We looked at crypto and Krypton, and now we're looking at Boost. Look at the 1, 2, 3, 4, 5, 6.5, maybe a quarter losses, but look at all the gains. So let's just go ahead and take a look at the equity curve of Boost, and again, just a little pullback, just like we got in 2013, just like we got in 2014, just like we got in 2015, just like we got in 2016, just like we got earlier this year. Whenever you want to get these pullbacks, that's the perfect time to get involved. You can get in the green dots, obviously, and you might miss something, but if you do see a pullback like this, definitely a great opportunity to get involved. In fact, these are just closed trades. This isn't even showing the the little tip up there. Little tip up there. So that's kind of how our models have been doing. In fact, we can, let's take a look at a few more things. Got the doubler, beautiful trade. A couple little whipped out, but beautiful trade yesterday. Marty, see what Marty's been up to. A little bit of a loss, few gains. Marty S. We can go ahead and take a look at the equity curves of said models. Green dot for Marty S, which is just breaking out the shorts of Marty. And there we go, Marty. A little bit of choppiness, actually. Doubler. Almost near green dot, as you can see. Go ahead and take a look at Macemo. Beautiful green dot. Macemo handling this beautifully. Actually, HW not in anything. Mace got crushed for a few losses. In fact, so much so that this trade isn't even being taken until this system recovers. We can take a look at that right there. Well, we don't have it up, but yeah. So Mace will stop trading if it falls below a certain threshold. HW, no trades there. S&P System 1.0 handling the sell-off like a champ. Of course, we got AI not trading, AI 2 buy. This is pretty impressive. Look at this bounce off of 2600 that we've seen. So we now have a beautiful trading range from 2600 to 2900 in the S&P. So that should be particularly impressive. Who knows if this is the top? We won't know for a while. But as you can see, we'll go ahead and look over at the at what we were talking about, which was the 50 years of trading. Should have updated this to that. It's very interesting. Sorry about that. So periodic returns. down 0.65%. We should definitely update that or so. So that's the. We'll go ahead and look at the details. So this is what the market's done over the last 40-ish years or so, and we've got these huge sell-offs. As you know, we have to take corrective actions when a market gets extended, and this little blip in late 2015, early 2016 is not really corrective enough, nor is this. So we've got extremely overbought situation in the from a technical perspective. In the markets, they may be fairly valued, a little overvalued, certainly a little less overvalued now that we see this nice little move down. So it could be some choppiness, but we definitely expect one of these moves in '08 and the early aughts to be forthcoming. So you definitely want to be prepared. You want to be hedged. You don't want your 401ks to turn into 201ks or your million dollar portfolios to turn into 400,000, 500,000. So you definitely want to be positioned and hedged. And of course, 2008, as mentioned, was one of our best years ever. So take a look at the R30 here. And so what we've done is, this is kind of interesting. What we've done is, let's take a look at the market. Oh my gosh, take a look at the market. So we actually went to bullish 2772.50. MADSC actually bought around 2700 on this anticipatedly, that's not a word, errant move to 2700, added down. It still lost a little bit on that and lost on the MADSC trade setup, obviously. Just went back to neutral, 2757.75 this morning. The market's now at 2744.25. So went bullish on the official market timing, but definitely this was a little more damage than we'd like to see. So getting a retest to the be-all, end-all of trend following significance, the convergence of the 200s, right around 2750 to 2800. Definitely an opportunity to just get back to neutral before going to bullish if we get some continuation, or arguably bearish. Kind of looks bearish. The damage has been pretty impressive. Now, of course, we do get that in October, so we'll wait and see how this move plays out. But right now, it's a situation of neutrality as the market kind of holds this area right here. So we're neutral. OMT is neutral. On the intraday chart, kind of bearish, bullish. Kind of saw some really good indications of bullishness here on this day. And right now, it's just kind of neutral. It's a Friday. It's November 2nd, 2018. So, we're just going to get some neutrality as the market kind of takes a breather over this very impressive move back to the upside. So, we were actually going to talk about the platinum. So, the platinum got rocked. Oh, we didn't talk about the select. Got rocked with the select. Just not cool. Not cool. I mean, over the grand scheme of things, it doesn't look too bad, but it was just a little more risk than the platinum, than we'd like to see in the platinum. In fact, the risk went from about $35,000 to $56,000 is now a new maximum drawdown for the platinum. So this will still be offered, and if you'd like to take advantage of that, but we just have a slight revision, taking out the select and adding in the R30 that we had talked about. So the new platinum, which has let's see. So the platinum has the doublet, S&P System 1.0, Macemo, Marty's, HW, main, R30. So we added an R30 and BHYM and took out select. It's just a little more risk than we'd like to see, and the maximum drawdown actually goes to 15,000. Or what's interesting is about 6% of equity. We've still got about 10% of equity drawdown for the platinum. So the maximum drawdown historically on equity is about 10.44%. But let's take a look at the. Here's the BHYM right there. So going back to '02, you have nice $16,000. There we go. $16,000 on $900 in risk closed trade. So that's been added. Let's see, what was the 5,300 is the maximum risk. 2,600 trade close, 2,600 at the close, and it's not making very much money, but over time it helps. So if you guys would like to get started with any of these portfolios, feel free to go to the website, chat with the support team live. Oh, signing off, and we hadn't even looked at the, let's see here. So we were looking at, let's see, make sure we can see that. And there are our portfolios boost. Oh, just so impressive, so impressive. Even with the draw, even with the recent losses, I mean, just a pullback. And now at $50,000. So, and MADS CDT got a nice little pullback and starting to move higher. Nice little, again, you want to take advantage of the pullbacks. You want to take advantage of the pullbacks and the retracements. And MADSC, so that was DSCDT, MADSC, an even more impressive damaging pullback was that $4,000 OMT trade. Beautiful trade, traded 9 times out of 10, just didn't work out. And so there you have it. Definitely a pullback in the DSC, and but still beating the market by 36%. The market's basically flat for the year. Beating the market by 36%. MSCDT was beating the market by 69%. So that's what you want to see. And relative to risk, look at how much risk the markets had. I believe we looked at that. Yeah, we did look at that. This may not be particularly current for the for where the market's at, but roughly. So there you have market outperformance in terms of risk. Is reward to risk ratio of the S&P 500 is 0.23, 77 points reward, which has been erased, 340 points in risk, 12% maximum drawdown. Whereas we've got 18% maximum drawdown for the oh, that was a platinum, so that's actually new, so we can't really compare this because yeah, the select just rocked. That was particularly unexpected, but it happens, and from time to time you do get these nasty pullbacks, just like in early 16 and 08 and the dot-com move. So again, whether or not this is going to be the top, we're going to wait to see. But if you guys like to take advantage of these opportunities, particularly to be hedged on the downside or when we have all this volatility, it's a great time to make money. So I hope you guys are having a great week, and enjoy your weekend, and we will see you next time.